Good morning. My name is Richard. I'm here to film my weekly blog on condo hotels. It is November 6, 2012. As you can see on my lapel, I have just returned from the polls and I've just voted. And you should do the same. Today I'd like to discuss an area that is often talked about, often misconstrued or misunderstood, and that of course creates argument and misunderstanding. This is the rate of return that a unit owner receives in a percentage from what the hotel operator brings in as gross room revenue. So what percentage of gross room revenue does the owner receive? Mr. Smith in condo A and Mr. Jones in condo B will have a big argument because Mr. Smith says, Mr. Jones, I get 50% of the gross room revenue. Mr. Jones says, I get 42%. And then the argument begins. Why the disparity? If they both had bothered doing the calculation, what they could find is they could find actually the gentleman who's receiving 50% may in reality really be receiving 41%. That has to do with deductions, and I'm going to get into that in a few moments. I think it's important to fully understand and for me to fully explain to you this area. I have to break it down in a couple of different segments because there are a few different things that interplay into it that are worthy of discussion. First and foremost is that I also am a unit owner in a condo hotel, and I receive folios each month telling me what happens in my unit. As we know, I believe we all know, that pooling in the United States is not legal. And so what you earn in your unit is what goes into your unit. So first I would like to discuss the distribution received and the equality of distributions through the building. Each rental management agreement, I'll refer to that as RMA hereafter, states that revenues are handled by a program and that they're equally distributed. It's unfortunate, but those of us in the business who look into it see that the majority of the systems that I've studied and seen are flawed. And I'll give you an example. The last system that I saw as an asset advisor, and we corrected that, the system distributed room nights so that everyone had about the same room nights. That's a big problem, and the reason that's a problem is because you can have a wholesaler sending a rate of $150 and you can have your hotel website bringing in a rate of $275. Well, if one room night was all that was placed in that month, you could see the disparity between the two, and they could be apartments that were side by side with the same view. There must be some human interplay, and what I have suggested to operators is that in addition to using the program, you must also use an Excel sheet and track the amounts of money that are going in to each unit, because at the end of the month, give or take a few percentage, each unit that's on the 18th floor facing the ocean, or maybe the 15th to the 20th floor facing the ocean, should have an equal amount of distribution in dollars, not only in room nights. So that's an important factor, and it's something that as a unit owner you have a right to see and have a right to demand. Someone should be looking at what's happening. Now, once again, I'm going to take a little segue to another area before getting into the RMA itself, and the deductions from the RMA. And that is another gray area that might be considered a hot button. And I really call upon the condo hotel operators to fix this area, because in a traditional hotel and in a condo hotel, you could create a package to people who are coming into your hotel for, let's say, breakfast. Okay? Now, the package, of course, would stimulate somebody to maybe choose your hotel over the other hotel. So let's say that someone comes to your hotel and they place them into your room from Expedia. Now, Expedia receives $300, okay? A percentage is taken off of that for Expedia. Usually it's about 25%. And so the remainder of that goes to the operator on your behalf. Now, what the operator will do is the operator will then reduce that cost. That, let's say it goes from $300, the fee is taken out to $275, comes into the account of the operator on your behalf. Now, as a condo owner, I would like to see that $275 on my folio. I have never seen $275 as described on my folio when a package is being used. Now, what will happen is the hotel operator will determine an amount of money per, let's say, hot breakfast. If it's $15 per person, that would be 15 times 2, because you usually give packages in increments of 2. Okay? And you would then have $30 deducted from the $275, and you therefore would receive $245 on your folio. Now, my problem is that the only thing you as the owner receive or are shown on the folio is $245, where I think it should be $275. But here's where it gets a little bit more of a problem. I'm going to describe what's called breakage income to you, and that's what hoteliers call it. I have never seen a hotel, 3 or 4 diamond, where more than 60% of breakfasts for coupons handed out at the front desk are eaten. That's the highest I've seen. Now, could it be more? Of course it could be. One of the factors for that would be to really serve an incredible breakfast. So you have to ask yourself as an owner, is that what my hotel does? Because listen, any of us that goes on a vacation for 5-6 days, how many times are you going to eat breakfast in the hotel? Well, if it's outstanding, you might eat there 3 times out of the 6 days. Maybe less, depending upon the quality. Once again, I see 60% of the people at most eating. Normally comes more in the 45 to 50% range. So what happens to these uneaten breakfasts? Well, they're called breakage income. Now, once again, I would call on the industry to make a change in condo hotels. In traditional hotels, where 1 or 2 owners might own the entire hotel, it really doesn't make a difference. It's an accounting situation, and the owner of the hotel is going to get the money anyway. They're going to get the money for breakfasts that are not eaten, and that will be called breakfast income, or they're going to get the money as room revenue, and that will be called room revenue income. But in condo hotels, where separate owners own each individual unit, the breakage income for uneaten breakfasts of anywhere from 40 to 50%, in my view, should be distributed at least at the end of the year, because it is an accounting nightmare to track this type of a thing. And I would recommend that it be distributed based on a pro rata share, based on the amount of revenues received in each room. There are various ways you can do that calculation, but this is revenue that over a 10-year course, if your unit is in the hotel program for 10 years, and combined with all the other units, this could go over $1 million easily in breakage income. So this is an area that is something that, as a condo owner in a hotel program, I would like to know, and I think you also would like to know. Now, RMAs typically have deductions that are taken from the gross room revenue that you see on your folio. They could be credit card income, it could be reservation fees. There are a number of things that could be deducted, and what I'm going to do is I'm going to do a screencast right after this portion of the video, and I'm going to show you what condo A, B, C, D, E, real condos, what they're deducting. And so if you have if what you show in your folio is $100 and you're deducting the reservation fee and this fee and the booking fee and so on and so forth, well, that $100 could go down to $70, maybe $65, and then they would apply the percentage split that's stated on the RMA. That could be 50% stated on the RMA. Well, think about it. When Mr. Smith and Mr. Jones are comparing, Mr. Jones may be getting 50% of the reduced amount, okay? So therefore that 50% would not be calculated to 50%, it actually could be 41%. And Mr. Jones, or Mr. Smith, I forget which I said, sorry, could be receiving less deductions, and he could be receiving actually more and be receiving a higher percent in actuality, but his rental management agreement may call to be paid 45, 44, 43%. But the actuality is to do the calculation, and I'll provide you with the calculation on an Excel sheet so that if you want to compare Mr. Smith to Mr. Jones in different condo hotels, there's a commonality in that calculation. And it's not just, this is what my RMA says that I'm receiving, therefore this is what I'm receiving. Why aren't you receiving the same? I also want to describe other fees that are taken, and they often will be taken after the split. So once you have split and you receive whatever percentage your RMA states, you might see a housekeeping fee, or a linen fee, or a maintenance fee. I don't have any problem with these fees. Linen happens to be the second highest line item on any hotel profit and loss statement, because even the best hotels who have controls in place, people take linens, or they use the linens and they put lipstick or something that makes the linens unusable again, and you'd be shocked at how high that could be. And the funny story about linens, by the way, that I'll share is that I was a consultant in a very high caliber hotel, and we went over the profit and loss statement in the back room, and the gentleman was so flustered by the amount of linens that were coming out every month as an expense. He said to me, "Richie, we need to put something at the front door that beeps so that if they're stealing our towels, we'll know." And I turned to him and I said, "You know, this isn't a great idea, because what you're going to find is you're going to find that some of your best customers are taking your towels." So it is what it is. And so that is often why you'll see such a high expense going into linen, and why your hotel program will call upon you to help offset that fee. So that said, I will provide you with an Excel sheet that gives you the calculation and compare actually 5 or 6 hotels, and then you can see what the differences are. What I have just done, and what I'm also telling you about, is the case where a condo association buys its own hotel program. And in that case, the distribution I would call that no deductions be included on the distribution. You know, if you do this, and the association does buy the hotel program, it gives you the ability to do 2 things. First is to rewrite your rental management agreement. For me, it's been a great thing to do that, because I've always looked at these rental management agreements that have been prepared by the developer who was then going to sell the hotel program to a third party, and I've always said, you know, this is crazy. I mean, these deductions really, there's not a lot of purpose to them other than to reduce the amount of distribution that's provided to the owner. I like it what I call simple stupid, and so to me, let's find a percentage. It may be 42% or it may be 44%, and let's take that percentage and apply it to the gross room rental revenue that is generated in that room. Simple. easy to understand, nothing to guess. And so we can do that if the association buys their hotel program and make it very easy to understand. And what you'll find is the percentage may say lower, but in actuality, if everything else, all other criteria and metrics and standards are met, you're actually going to, as an owner, going to receive a higher amount. The most important thing in regulating your return on your investment is how the hotel operator is actually doing compared to competitors. Do you drive your market share in earning gross room revenues? Do you exceed your market share? Are you eating into that market share every month and increasing your revenues? This is the key. This is the important thing, because if you have an underperforming hotel operator, then the percentage doesn't really make that much of a difference. The amount of cash you're going to receive is going to be less because you're not generating enough room revenue, especially compared to your competitive set. And that's something also that my company does, and we assess how your operator is doing, how the operator is performing, and how they can get better, not just to tell you, you know, this is, they're underperforming and that's very bad and no good. We actually look at the reports that are generated, and we can actually give ways and look at the sales and say, okay, here's how we do it through yield management, through people who are performing in your competitive set already. You're not getting your share, and so we do that. Okay, so that's really the most important thing to focus on. Lastly is your return of investment on your particular unit. Well, each unit owner is receiving a different return on investment. It really depends on what you have invested. So I give you this Excel sheet to calculate what your return on investment is, and of course you want to maximize that. And all these things that I've mentioned today have to do with that. These things you have a right to assume are being done. The transparency through good hotel operators will allow you to see, make sure your distributions are somewhat equal. If you have a unit on the 15th to the 20th floor, again, and it's an ocean view or an ocean front, then you should be receiving comparable funds, gross room revenue in your unit, to those who have units in the program that are on the same floors. And that's very, very important. So hope this did good for you today, gave you a little bit better of an understanding. I am now going to follow this with an Excel, a strategic Excel sheet on a screencast. Sorry, that was the word I was looking for. And then you can follow step by step on the screencast how this is all calculated and how different condos calculate their rate of return percentage on gross room revenues. Thank you so much. Bye-bye.